Live now. Welcome everybody. Welcome to the Australia special presentation here, Making Money in the Markets with VectorVest. My name is Russell Markham. I've got a very exciting topic to show you today. Gold spot prices are surging. They're nearly through $4,000 an ounce. And as a result, you might have seen some key gold stocks absolutely rocketing up in price. What I'm going to do today is I'm going to go and show you some of the best performing gold stocks out there in Australia. So before we get going here, let me just transition across here. And I've just got to open up my presentation slides. So I'll just bring up the presentation here. All right. So disclaimer statement, as always, please note our license numbers and note general advice only. We cannot take into account your personal financial circumstances. And as always, past performance is no guarantee of future results. Right, with that said, I'll just click out of here, jump out of there. So here I am. I'm in VectorVest currently, all right, for Australia. And what I'll do here, I'll just right-click, make this a little bit bigger. It might be a little bit difficult to see, so let's make it just a tad bit bigger there. All right, so I've picked on one stock for no particular reason, because it's a gold stock. And so there's one here in Australia, and it's called Gold Road Resources. All right, nice and easy name to remember there. It's got the word gold in it. I just simply, if I'm looking for any gold stock in VectorVest, all I need to do is just simply type the word gold and look for anything with the word gold. All right, doesn't matter which one I pick on to begin with, because if I scroll across here, it'll tell me industry, materials, gold, and the sector it's in materials. If I just auto fit all columns, make it a little bit neater. All right, so I can read it all. Okay, so once I've got the first stock, what I can do now is I can right click and I can view stocks in industry group. So right click, view stocks industry group. And from here now I'll get all the gold stocks, all right, for Australia. Here they all are, materials, gold, materials, yep, and here they all are. Nice and easy for me to see all here at my fingertips. Okay, so what I can now do is I can come into here and I can say, well, VectorVest, show me 190, so show me all of the 190 stocks. Here we go, gold stocks. And what I'm going to do is I'm going to quarantine all of these stocks into a watch list to refine it further. We're going to take these stocks and we're going to work out the best performing gold stocks. So of the 190, how many of the 190 jump out? All right, so I'm going to select them all, right click. I'm going to add it to watch list. Here we go. And I'm going to put it into gold. And let's see here, gold stocks. Here we are. 8th of October. I've created this earlier just to speed things up. Close it out. All right, you can learn all this functionality. It's nice and easy to do once you go through the basic training with VectorVest. And again, I'll just make this jump out a bit bigger because it's just a bit crowded looking here. So I'll make it nice and easier to see on the eye. A few of you might be watching on iPads and iPhones. So let's make it nice and clean and easy to see. And let's take away all the clutter for now. All right, so we're just going to simply look at the company and the symbol. Here they all are, right? So here they all are at our fingertips, 190 in total. Now, if I auto fit all these columns again, so I'll bring in all the parameters, you'll notice that at the top of the list of all the gold stocks, these are the best combinations of fundamentals and technicals. So in other words, these are the prices that are moving up the best, left to right, smooth left to right prices. And they are also companies with the best financials on average, so good fundamentals. And so in VectorVest, we have these two indicators, RV and RS, relative value, upside potential, relative safety, the health of those company financials. They're on a scale of 0 to 2, and the higher above 1, the better. So I can see Regis Resources, RV, relative value, well above 1, relative safety, well above 1. So that tells me straight away that the fundamentals behind this company are not bad, and so let's just smooth it out a bit here. So this is our 12-month leading forecast on earnings, EPS. You can see the earnings have been rising nicely from left to right, and up goes the share price. So that's our top fundamental gold company right now. If I scroll down to the bottom of the list, this one's sell rated, so we need to take special care at looking at this one. A very different story in this one. Look at this. The earnings are pretty much flatlined, and the price continues to fall. And so let's see if I look at the second one here from the bottom. Look at that big drop off in the earnings over here. So just because it's a gold company doesn't mean it's going to necessarily be a high performer. As you can see, the earnings have been fairly anemic for quite some time, and you can see the price pattern's been falling. So simply rushing out and buying top performing gold stocks just because the gold spot price is surging up doesn't necessarily mean you're going to make money. What if we go and buy those really good quality gold companies when the gold spot price is surging up and the market on average is going up? So we're going to put our concentration at the top of the list. Now, let me just set the scene. So hopefully you can all see this. Here we go. And I'll just close that for now. All right, so I'll just take that out. Okay, so some ads popping up here, but I'll just try and keep it just per the graph. So if you're interested, it's goldprice.org is the website there. They do a really good job in showing you the gold prices over a couple of years here. So you can see this is the gold price here over the last 5 years. We went from around about 2,000 an ounce, US dollars an ounce, to just on 4,000 US dollars an ounce. And it looks like it's going to break through any day now. Time will tell. So 3,952, my goodness, just shy of 4,000. I suspect once it breaks through 4,000, it'll probably keep surging up. But time will tell. I can't give you any personal advice. I don't know what's going to happen. But if I have a look here, look at this, 1973. All right, I was born in 1975, so pretty much as old as me now in terms of how far this graph goes back. Look at that. Look at that. So gold sort of plateaued from 1984 through until about 2005, 2006. It just kind of went nowhere, right? And look at that, from 2.6 through to 210, it rocketed up from 500 US dollars an ounce to over 1,500, nearly 2,000. And then it plateaued and fell away. And look here, from 218, 19, around about the 219 mark, we went from what, about 1,700 all the way to just on 4,000. So you can see currently gold is going ballistic. And if you look at that over the last, say, 2 years, you can really see it now. Look at that, from 2,000, doubled in 2 years. So this is what I'm interested in looking at. There's all sorts of reasons why, the wars around the world, what's going on in the Middle East, Russia, Ukraine, the fear of inflation, etc., etc. There's so many different narratives behind it. It's not what I really want to get into today, the narrative behind it. I just want to see what's in front of us. At the moment, gold is moving. So therefore, what gold stocks could we consider? All right, we can also have a look at some gold ETFs later on too, if we get time. All right, so let's close it out. So I'm going to begin my wonderful analysis using VectorVest. It makes it so easy. So all I've done is I've put all the gold stocks that we track 190 into a watch list. I'm going to show you what the average watch list looks like to begin with. All right, so here we are. Look at this average watch list. It's not bad at all. Okay, in recent times, but historically not as good. But if I look here in recent times, look at the earnings. These are the earnings that drive the share price higher. So the 12-month leading forecast on earnings, you can see the price has gone from what, about 60 cents on average to nearly $1.80. Don't know about you, but I certainly don't want penny stocks. I'm not a fan of penny stocks. I want higher price stocks. And so what if I could get this type of performance with some really good blue chip type gold stocks that are not penny stocks? And who wants to go out and buy 190 stocks? Far too many to manage, it'd be very stressful. What if we could get that type of performance with a fraction of the amount of stocks? What if we were to do it with, let's say, 4 or 5 stocks or 10 stocks? Okay, so I've set the scene. Now let's go and do it. So the first thing I'm going to do here is I've got all these powerful indicators in VectorVest. And so the one I'm going to pick on here is this one here, RS, relative safety. All right, I sorted it, by RS, relative safety. If I right click on any stock, it doesn't matter which one, and I can come in here and I can view the full stock analysis report. So I load that up. And if I scroll down a bit, you'll see here, relative safety. Relative safety is an indicator of risk. In this case here, PRU has an RS of 1.46, which is excellent on a scale 0 to 2. So anything above 1.4 is very, very good. RS is computed from the analysis of the consistency and predictability of a company's financial performance. It looks at things like debt to equity ratios, sales volume, business longevity, price volatility, and other factors. So it's a very powerful fundamental indicator. So straight away, I want high RS ranked gold stocks. There are plenty of gold stocks that are not doing very well at all. Sure, they're a gold stock, but they're not producing any gold at the moment. They haven't got resource consent approval. They haven't got their debt financing facilities approved by the banks, whatever it might be. So they're purely speculative, non-producing gold companies. And so these would be these companies sort of towards the bottom end of the list here. So what if we were to go and screen out relative safety score? Let's drop it at, let's say, anything below 1.2. How about that? So from here onwards, so 1.18, I'm going to take all these ones out here. So straight away, I've ruled out any of the weaker financial companies. All right, so I've taken them out. Here they are. Sure, a couple of them there that I've taken out are probably still very good companies, but I'm looking for the best financials at the moment in the gold sector. All right, so I've whittled it down to 15 out of 190. Let's go and have a look at what the average shows us now. Let's have a look. Whoa, look at that. Beautiful set of earnings. And if you look at the average price here, the average price, these are no longer penny stocks. So started off, what was it, a year ago at around about, what was it there, $8.70, and is now $14. All right, so it's almost doubled, and there's certainly no penny stocks. So a good start, very good. Let's go and refine it further. All right, so we've got 14, or 15 should I say. So we've got 15 here. Can we make it better? Next one I'm going to go and pick on is this indicator here, relative value. It's looking at long-term upside potential. So again, let me right-click a stock, view full stock analysis report, and I'll show you what I mean. All right, so here we go, relative value. It's looking at upside potential. Let's zoom it in a bit. Relative value is an indicator of long-term price appreciation potential. In this case, CMM has an RV of 1.64, which is excellent on a scale of 0 to 2. This indicator is far superior to a simple comparison of price and value because it is computed from the analysis of projected price appreciation 3 years out, and it's compared then to a AAA corporate rated bond. So if you look at the RV score, what it's saying here is that Capricorn Metal is likely to outperform a AAA corporate rated bond by up to 64% the next 1 to 3 years. I'm not saying it will, but you know, that's the opportunity cost of your money. Do you put your money into a bond, a term deposit, leave it in cash, or do you look to invest into a stock? If you're looking to invest into a stock, well, you're taking on more risk and therefore you want more return. And so what relative value is saying, relative to a AAA corporate rated bond, it's likely, not saying it will, but it's likely to outperform it by up to 64%. All right, so I'm going to click on RV and just look at anything where the RV is unacceptable. So I'm sorting it in descending order, scanning my eye down here. All very good. The lowest one here, Volt Minerals, 1.31, still a great score, but it's the weaker of the bunch here because it gets a bit difficult to differentiate. Yeah, did I delete all? Let me just make sure. What have I done here? Did I take them all out? Silly me. All right, so what I'll do here, actually, it's a good refresher here. I'm not sure what I did there. Did I select them all? Doesn't matter. I will find my gold stock again. All right, so let's find gore.ax. Here we are. Right click and view stocks in industry group. All right, here they all are. All right, it's a good refresher. I'm sorry about that. I'm not sure what I did there. Anyway, it's a good refresher. So I found the stock. Remember what I did. All right, and then I just go and select them all. So in here, I'll just highlight them all. Right click. And I add to watch list. In this particular case here, I'm going to go and put it into my gold stocks. Here we go. All right. So that's what I did. That's a good refresher. Go back to the gold stocks. Remember we had 190 order fit all columns. And so then what I did here is I sorted it by RS. Remember that? And I just removed anything below 1.2. So from there onwards, I just went down and removed it all. So I just scrolled it all down. Big time saver because I'm not wasting my time looking at companies that have got, financials that are not as strong. All right, so remember we got it down there to 15. And then I just simply went to RV, sorted it by RV, and I simply just took out. Now, make sure I'm not going to delete it all. That's all right, delete selected. I think I clicked delete all. My apologies. Okay, so we're now down to 14. let's continue the journey. This is a very useful indicator here, CI, Comfort Index. CI will look for the best trending stocks. So let me show you the definition. Right click, view stocks. Let's view the stock graph. That's what I want to do. And if I put on CI, here it is. And I'll make this jump out. Make it really look good. So let's push OK. Let's do this. Let's make an area graph. Now it'll really jump out. Comfort Index, smooth left to right. Price pattern. So here we are. CI breaks above 1 here. Look at that. Price goes from $4.69 to $11. Okay, so you want to find those stocks with a really strong CI trending up. You want to make sure that the earnings are rising. Put the two together. You might have recalled seeing earlier videos where I showed you that, right? Okay, so closing out of here, I'll show you the definition. Right click, view full stock analysis report. It's easy to remember. It's a picture of a couch. How comfortable are you sitting on that couch as such? Comfort Index, CI. Let's zoom this in because it's a bit difficult to see. CI is an indicator which reflects the stock's ability to resist severe and or lengthy price declines. In this case, EVN has a CI of 1.88. Yep, you got it on a scale of 0 to 2, which is excellent on a scale of 0 to 2. CI is based solely upon a stock's long-term price history. So, sorting all the stocks by CI, here they all are. This one here hasn't got a very strong CI. All right, see, although it's coming up and it's trending up, but it's been under a bit of pressure because it's been a bit lumpy over here. So we've got some really good ones to consider. So for now, I'm going to be fussy because I can. I've got plenty to choose from, so I'm going to delete selected, not all this time. All right, so I got it right. All right, so we've got 13. Let's have a look at the watch list average. Ooh, that looks pretty good to me. Look at that CI moving up very nicely. Look at those earnings. Look at the trend, but there's 13 in total. You might say, well, you know, I don't quite want 13. What if I could just get it down to 5 or 10? All right, well, let's just double check. So the RVs are all good. RS is all good. CI is all pretty good. The final way I like to then rank and sort this indicator, relative timing. It's looking at short-term price momentum, not to be confused with CI. That's the longer trend. Relative timing is a short-term price momentum indicator, again on a scale of 0 to 2. So our top one here with the most momentum is PNR. And if I have a look at this one here, let's just simply put on the relative timing score. Here we go. Look at that. It's bursting above 1, rocketing up. This is moving very quickly at the moment. Conversely, the slowest moving one here is Gold Road Resources per our top list here. And let's graph this one here. And you can see, so technical's been under a bit of pressure. It fell away and it's sort of coming back again, but it's been under a bit of pressure. So what I'm going to do here is I'm going to move out the slower RT scores. So what have we got? 13. Let's count back 3. Right. Oh, look, these all neck on neck. So it's a bit cruel to take this one out considering it's all neck and neck, but nonetheless, I'm going to take out the bottom 3 RT stocks. Okay, so delete selected, there we go. And so now I've got it down to 10. You can see the average relative timing across those 10 is 1.76. Very good momentum. Relative safety, superb at 1.32. Very good upside potential, 1.67 out of scale of 0 to 2. Undervalued. These companies on average are undervalued. So if I right click, view watch list average, and drum roll, there's my final 10 selection. Okay, so you can see here it all is. These companies looking to grow their earnings by 32%. If we look at the EPS, the earnings taking place, superb. So earnings are rising. Comfort Index, smooth from left to right. For those of you after a bit more technical analysis, what I'll do here is I can show you the sales taking place. All right, so I think I've got it in here already. Have I put it in here already? Yep, there we are. There's the sales. So this is in, I think, hundreds of thousands, but don't get too concerned with the number for now. It's more the fact that I want to see the trend. They're growing their sales. Good. Now, if these gold stocks on average are growing their sales, they're only going to be profitable if they're selling more and more at a higher margin. And, to give the analogy, if I were to run a coffee shop and I were to sell a whole lot of coffee each day, and someone said to me, wow, Russell, you're going really well with your coffee shop. And I said, yeah, you wouldn't believe it. I've sold 100,000 cups of coffee today. I've worked myself to the bone if it was possible to make 100,000 cups of coffee. And you would say to me, wow, you must be doing really well because you're assuming that I'm selling all that coffee at a profit. And I say, well, actually, it hasn't been a really good day. I've lost about $30. You go, why is that? Well, it's the reason why I sold 100,000 cups of coffee. I was selling them at 8 cents a cup. You'd look at me and go, really? Well, that's a bit foolish. Why would you do that? You should have sold it at a profit. It's the same with companies, right? You can have a company growing its sales, but is it profitable? And so let's go and find out. So we've got this indicator here called net profit margin. So for every $1 of sales that you're making, what are you making in profit? Here, on average, these gold stocks are making 29 cents on the dollar. So let's come back to the coffee shop analogy. Let's say you come back a year later and I've finally learned a bit about business and I got myself a bit more established. Now you say to me, how are things going, Russell? I say, actually, really, really well. I sold 100,000 cups of coffee. You say, wow, okay. Tell me more. Oh, yes. Well, I made $200,000 profit today because I'm selling my cups of coffee for about $2.50 each. And it cost me about 50 cents a cup of coffee for my costs, coffee beans, hot water, whatever it might be. And so here, in this analogy now, coming back, we're selling a lot. These companies are selling a lot, and they're making higher margin. Why are they making higher margin? The gold price, on average, is probably accounting for a lot of this. 20 cents on the dollar back in December 2024. And if we go here, as of October 2025, it's gone from 20 cents on the dollar to 29 cents on the dollar. So what's that? About, over 30-40% uplift in the profit. Your profit margin, it's gone up 9 over 20, 45% if I've done my math correctly, right? So the margin's gone up 40-odd%. And so that's why you're seeing such an uplift taking place here. So that's how you do it using VectorVest. You go and identify the stock that you're after. And you'd say if you're not into gold stocks, well, fine, you can repeat the same process, but this time around, go and find the stock that you're interested in. So what industry or sector are you interested in? So you might say, well, interesting that you ask. I am interested in, let's say, healthcare equipment and services, right? So you find any company, doesn't matter which one it is, right click. And then in here, I'll view stocks industry group. Here they all are. So there are 68 in total. Add them to watch list, and away you go. You can start diversifying, weeding out the bad performers. So if I was after this industry, well, straight away, here we go. Here are the top relative safety ranked stocks. You can see sales, net profit margins. This one has been a phenomenal stock over the years in terms of its earning profile. All right, and so then you begin your analysis doing that way. Okay, so that's how you do it. But coming back to watch list viewer, all right, gold stocks, here we are. Here they all are, so you might want to jot them down, see what you think of them. And I think these stack up incredibly well. Let's go and have a look. We've got a minute or two left. Let's go and find a gold ETF. All right, so gold.ax tracks the physical price of gold. So ETFs, commodities. Let's right click and view full stocks in industry. All right, so in here, view stocks in industry group. And so here are all the different ones here. We've got 12 in total, and so you can just work it out by just looking at the name. So physical precious metals, that would also include gold, gold bullion, gold ETF. One here, physical gold, gold bullion, gold ETF. Bloomberg commodity, that would include gold. We don't want oil, gold corp. Metal securities probably would include gold in there, but let's whittle it down to these. Let's right click. Let's add to a watch list. And here I'm going to go to my gold one. I've already done a gold ETFs before. I've enjoyed this exercise so much. I'm going to create a new one. All right, so new watch list. Gold ETFs short listed, because we're going to shortlist them. All right, put it in there. All right, so here we go. Let's close out of here. Let's go to our gold ETF shortlisted. Here it all is for us to have a look at. Let's make it nice and neat. So order fit all columns. Here we go. Let's have a look down the bottom. Now for ETFs, I cannot tell you what the earnings are and all the fundamental analysis because things change all the time. But what I can show you is the momentum. Here's the short-term price momentum for those ETFs. So you can see it's on a tear at the moment, really rocketing up. Let's look at our comfort index. Wow, look at that comfort index. That's really powering on as well. You can see it broke above 1 here, held above 1, and it's been moving quickly. So let's go and have a quick peek at this just to clean it up. Relative timing, any weak links here? Let's have a look. This has got the lowest relative timing score, so I want to have a look. It's been sort of on a trend down. Can you see that? Sort of it started roll over from around about there. In fact, sorry, I just got to draw a freehand line. All right, so you can see here, it started to fall. It's pretty much fallen quite a bit. Slowly turning around, but you can see the comfort index also starting to roll over here, falling away. So I'm going to take this one out for now. All right, so I've just got to be careful here that I'm not going to remove the wrong one. All right, okay, so relative timing, that's the lowest one here. So delete selected. We'll take that one out. Let's see here in terms of comfort index. They're all very, very strong. This is the weakest of the bunch, but only by a whisker. Still looks pretty decent to me. I'd be reluctant to want to take that one out because it's just so good anyway. Let's have a look. Here we are. So here's the ETF one here. Looks pretty good to me. CI powering up, relative timing holding up. So the final bit here I'm going to do. How am I going for time? I've got 3 minutes. Here we go. I'll do a finale here. I'm going to create a new watch list. I'm going to call it Gold, Stocks, and ETFs Final List. Now, again, I can't give you any personal advice. I don't know whether this is right for you or not. This is just purely doing analysis today. You'll need to speak to your advisor for any personal advice. I can't give that to you today. So, right-click, and we're going to add to watch list. So, I want to put it into Gold, Stocks, and ETFs Final List. So, I'm going to put the ETFs. I'm then going to put the gold stocks. Right click, add to watch list. So not portfolio, add to watch list. Here we go. And put it in there. All right. So here it is all put together. So 17 in total. Let's look at the bottom line. Just purely look at the price and the momentum. Here is gold and ETFs all put together. Look at that. Superb. Absolutely superb. And if we go back, let's just go back a year out of interest and let's quick test all of these. So I'm going to run a time period. Let's go back to the start of the year. How about that? I'm just keen to see how this has performed. So since the start of the year, look at that, cracked the magical triple digit 100. The average was 100.6% compared to the all odds, which has done 9.32%. So there you go. And they're the top performers. PNR was the top performer. The worst performer was gold.ax, coming in at 40%. Still pretty good. The last thing I'll do here, you might not want 17. You might say, what if I were to whittle it down? The final way I whittle things down is I like to just look at the smoothest trending stocks right now. So I'll sort it by CI, the smoothest trends, and so I'll take out the bottom 7 to keep me in 10. 2, 3, 4, 5, 6, 7. All right. Let's click delete selected. All right. There we go. So I've got it down to 10. And let's see what ETFs are in here. 1, 2, 3, 4 ETFs and 6 gold stocks. So 6 stocks, 4 ETFs. This is my final bit of analysis. Let's have a look here. View watch list average. Got it down to 10. Let's see if it still stacks up. My goodness. It looks pretty good to me, right? How do you like that? That's a mixture of gold, stocks, and ETF. Right? It's all in one industry / sector, so you're not diversified. But if I was to pick on 10 gold stocks / ETFs, these would be the 10 I'd begin my analysis on to make a final decision if I wanted a handful here or there. All right, so there you go. I hope you found that interesting today. That's the power of VectorVest, your fingertips. It empowers you to get things right and to be informed. So I hope you got a lot out of it. I'll switch back to the other screen. You might just want to jot those down to see what you think. This recording, of course, is on YouTube, so you'll get all this on YouTube. And please feel free to spread the word. If you found this analysis interesting, please click the like button, send it on to friends and family, whoever you think might enjoy this presentation. Thanks again for coming along. Hope you got a lot out of it. Same time, same place next week. I'll chat to you then. Bye for now.